and then we'll get started.
Yeah, make me co-host, and
Host. Okay.
I can do the share screen.
Sweet.
Okay, let's see. All right, sweet. All right, guys, my TOS screen, is that what you guys see? What we were just looking at
Yeah.
here?
Nice.
Got it. Cool. All right, let's go ahead. Do we still need to record it, or it'll do it for us?
I'll record it as well.
Okay. You want to intro it?
Yeah.
Okay. You go and record. You got it,
Or
dude.
you record it.
I
You
record
record
it.
it.
I got it.
Yeah.
Okay, okay,
Okay, cool.
okay. Ready, go.
What is going on, everybody? I hope everyone had a fantastic weekend. It is our favorite time to start getting ready for the week. As we know, Sundays, we sit here, we prepare, we get ready so that we can have an amazing week, right? We're not, as traders, we need to prepare for the week. It's not just wake up, roll out of bed, see what other people are taking. Not going to lead to success. So we got to prepare. As we know, these Sunday watches, we go over economic data for the week, Fed speakers for the week, any kind of earnings for the week. And then we go over SPY, ES, SPX, QQQ, IWM, and then we go over some individual ticker names that we can form some trade plans and then get ready for the week. I'm your host, Mr. Banks, along with No Risk, No Premium. I'll have him take it over as he starts.
Yo, yo, yo. What is up, guys? Thank you, Justin, for the intro. Happy Sunday, Wolves. Happy Sunday. Justin's completely right, guys. You have to completely prepare for your week. If you're starting on a Monday, you're a day behind all of the real winners out there that are getting it done on Sunday. So, without further ado, guys, we always like to go and start with the economic data. This week seems like a quote unquote light week, if you will, just because no CPI or PPI, no PCE, just your normal kind of data prints that come out. One thing that did come out and make apparent to me that we have PAL. We have PAL twice this week, not in a FOMC fashion, but we do have PAL opening some delivering remarks at some conference, I'm sure. And then we has on a panel, right? So Wednesday and Thursday during market hours, he will be speaking. Now, I don't know how long his opening remarks will be here. That's 15 minutes before the market opens. But this one is definitely during the market open here on Tuesday. Whoa, on Thursday at 2 p.m. So we need to pay attention, right? We need to pay attention to Wednesday and Thursday. But as far as big data goes, I mean, really nothing in the pre-market Monday. It's nice to see. We do have a knucklehead coming out to speak. Tuesday, little bit of data in the morning. Another knucklehead, and consumer credit later. So Monday and Tuesday, almost kind of a wash. Just have to look out for whatever these idiots are going to come out and say that could, possibly make the market dip, rip, liquidity grab, whatever. More knuckleheads, right, onto a Wednesday. But the real data that comes, jobless claims, will be the real big data that will actually, I think, actually move or put some buy and sell pressure on the market. That always comes out on Thursday. You guys know that. That's at 8:30 a.m. Eastern Standard Time, 1 hour before the market open. And then we have Veterans Day. It says one scheduled. I don't know why Market Watch does not have showing that we have. It's pretty much all of the data for the University of Michigan data, consumer sentiment. So the 1 in 5 year inflation expectation, the consumer sentiment data, et cetera, right? So it's all that data that comes out, and that's all at 10 a.m. Eastern Standard Time. Guys, don't forget, if you're in the Discord, you can always go over and check the earnings and economic data on the Discord under the tab earnings and economic data. It has everything there. You should be checking that every single morning. All right. Other than that, onto the earnings. Nothing huge, nothing that grabs my attention. NVIDIA is going to be the last of the Magnificent Seven, or whatever you want to call them, that we can see here, but that's not till the 21st. So that's a couple weeks away, right? Looking here, Uber, AMC, Walt Disney, Celsius, Upstart, Realty, NXP, Devon, whatever, Twilio, Plug, him, hers. I think the only big one, and I think the only one would be worth playing, in my opinion. Now, you could play anything you'd like, but to watch the Walt Disney, because I know that we were flirting with some big levels on the chart there from a macro stance. So look at the Walt Disney. That'll be interesting on their earnings there. But the next big one we have to watch out for is NVIDIA. Obviously, not until 2 weeks away. But as far as Apple, Microsoft, Google, Tesla, all those guys, the ones that make the market move on SPY and QQQs, they aren't reporting anymore, right? They've already reported. So we are through the thick of it, if you will. All right. So, guys, data this week, nothing really huge. We got PAL twice. Pay attention to that. Thursday and Friday, the data prints I will have to watch. And then we've got Walt Disney this week. So you want to pay attention there. Other than that, onto the chart. Nice V-shaped recovery here. Do we sustain? I don't know. But it is like one of the biggest weekly candles we have had in quite some time. If you just go back and look, I mean, look at this weekly candle. Like huge weekly candle. Now, one thing that Justin and I were talking about earlier today, seeing this huge green weekly candle here. It took back pretty much 2 weeks of selling, but those 2 weeks on each of those candles had more volume than this candle did that all the buyers stepped in. So was it possibly that you just had a bunch of knuckleheads that thought that they were going to short right here at this major supply demand flip, and they all got short and ended up trying to short their way out of the trade, ended up having to cover and just made its way up, right? Because you could see the volume is just pretty stagnant. It's not really significantly increasing, right? But nonetheless, we went up, right? We went up. So you can't deny that. So what's going to be my plan? What I'm going to be looking for this week, I think a move right back into this area, this balance up here is going to be warranted. I think maybe we could see a little liquidity grab above, like one of these little wicks that comes up. You guys see these guys, right? Where we open up the morning up here, one of the days this week, it kind of moves higher and then drops back below. So initially up here, I'll be looking for the short. Overnight session, though, you're going to have mark about this 4,400 area. That will be a big zone just to see if we want to continue higher. Now, a third day of a gap up would just be insanity. I think it would have a lot of people emotional, but that doesn't mean it can't happen, right? It doesn't mean it can't happen. So for me, I'm going to be watching this zone up here, 4420 area to 4430, watching this zone for little wicks, like little wicks above to see if we can get the liquidity grab to the upside, grab the sell side liquidity. All right. Or you're going to grab actually late buyers up here. Okay, but you need sell side liquidity, which means we can sell back down. Do we get a very nice pullback? I don't know. Just doing a very simple Fibonacci retracement, right? Look at this zone down here. I really like to think that if we pull back to 4,200 again, that would be a huge long opportunity. Okay, you guys can see this zone that we had, right? We had a little bit of support. We broke through. And then we had this resistance here, and then we broke through, right? So this 4,200 zone down here is going to be a big area to watch if we pull back down there. I have no idea. Next big zone I like is 4,290. I like the 4,290 area. So we can zoom in here just a little bit so it looks a little easier. Really, really, really simple levels to play on. 4,290 zone is going to be that previous week high, though, right? That previous week high. I'll go on to the SPY and Qs chart, and it'll look a little bit easier to see. But that was the previous week high before last week, and we just kept on gapping up and through it. So I think showing that we had this previous week high, I think we can come back and down and test this area. I like 4,290. 4,200, 4,290, 4,200, 4,290, 4,200. Those can be the back test levels I will watch. We'll play around this 350 zone for just tomorrow, but if we break underneath there, 4,290, 4,200 will be the big levels below. And you can see this 4,420. Very simple levels here. Don't need to overcomplicate it. These are the levels you want to look to play around. Onto the SPY chart, though, just look at this daily chart. Look at these gaps, right? Look at these gaps. So multiple gaps, right? Multiple gaps that we're going to look to play into. I like this gap fill down to about 43. I'm sorry, 423, 423.50, right? This gap fill wide, 200-day moving average. Previous week high is about 424.80, right? So if we can get that breakout and then retest and close the gap, I'd be loving to look at this level in here, right? At 423.50 to 424. I want to go to the 4-hour. So taking a look here, we have the same thing, right? We have this little bit, right, of a gap left, this tiny little bit of a gap left from the cash open, you can call it a bear gap, if you will. You guys could see it there. I'm looking for that same thing. Maybe get up here and close this area, maybe a little wick above, and then drop it back down, right? Going to play around this 431 zone, right? 431 zone, that's like 43.50 on ES. Okay. If not, I'm going to be looking for the next bounce play. It's going to be about 423.50 to about 424, 425-ish zone. There's just a huge gap here. Doesn't mean it has to close completely, but it is the previous week high before this last week. So if we can get above that zone, looking for that retest would be great. If not, we can definitely fall back down to about 417. That's going to be about 4,200 on ES. So these SPY and ES levels are very simple. But if you like to have or just visualizations of a gap, then the SPY chart looks a lot cleaner than the ES chart does, right? ES, because it trades pretty much 23 hours a day, there aren't really gaps on ES for the most part, unless we have contract rollovers. Okay. So looking at 438 here to the upside, almost 439, maybe a gap fill wick, right, to the upside. You guys can see that resistance up here. And then maybe they drop us back down to this 431. Can watch for a bounce there initially, but I think we pull back enough to get this gap fill here. Down at 423.50. If you just put a little, right, we guys can see area of confluence, right? You can see as far as a 50% retracement, it would be that previous week high zone, right? Zone. So that's what I'll be watching for this week, guys. Really simple levels here on SPY. Same thing with Qs. QQQ. I think QQQ is actually a much cleaner chart than SPY or even ES is, right? Just zoom this in. You guys can see very nice trend line, pretty much respecting it here. Huge trend line. I don't think you can deny that this also does not look like a very nice bull flag, right? I don't think anyone can deny that, right? You got the rip higher, you've got the flag out. Okay, so we could stay in this for a while, though, right? That doesn't mean just because you draw a bull flag that it has to break out. But nonetheless, you can't ignore that this is definitely feeling like a bull flag is starting to play out. If you're a seasonality person, right, starting from the second week and on of November, typically tracking till the end of the year, you could call it the holiday rally, Santa Claus rally, whatever, doesn't matter. It's typically a bullish from a seasonality perspective. Now, that's not, 100 proof or, 100% accurate, but that's just tracking over the years. We do get a little bit of a bullish push into the new year. So are we setting up for this bull flag to maybe play out? Right? Oh, I don't want to do that. Play out, maybe have that pull back and then have another, what I'm saying, pull back. Guys, look, we're at the end of November, we're getting into December and then into the first, maybe we go higher. I don't know. I'm just saying. But I think buyers are finally going to run out of steam and they're doing it right here at this downtrend line. So levels we're going to be watching, still just a huge gap here on the daily. I don't know. Let me take this off real quick. Whoa. Remove. I guess I put two levels on there. Huh. Is there still a little gap right here? I believe there is. Okay, got this gap here. So here's your first gap, right? I'm going to do the price. Is going to be here. Yep. So here's your first gap, right? I'm going to be looking for the pullback, small bounce here, opportunity, right? 363, but I do like 360 much better, 357.50. So 364, or sorry, I guess it'd be 364 on this gap, 363.50, 364, 360, 357.50, 351. Levels are super simple. Remember, we had that multiple weekly support here at that 351 zone. We broke down from it and we reclaimed it. Still have a small gap there. Okay, so I'll be looking for that zone, for this zone to possibly be tested, right? Because that would make sense to come back down. And if we did just we did a very simple, right? Look where we're looking for these pullback between 50, 61, 61.8, 78.6, kind of into that zone, 351 down here. I think we could get as low as that. I think it'd be healthy, but 357.50, I'd be comfortable for the bounce longs, right? So I'll be watching for this reject area at about 169, maybe even to 170 on this. If we get a touch a little bit higher, right? Maybe even get people caught off sides a little bit, maybe even wicket above, right? I mean, we're just screaming to the upside here. So looking for a pullback initially, but I think we would have to see a little bit of a liquidity grab to the upside first and then pull it back. 363.50, 360, 357.50 bounce zones and a gap fills. 351 last line of defense. Under that, we think we definitely go down to these weekly lows. And I think the 200-day moving average is going to be in play. where you guys can see that 200-day moving average is here at 341 now, right? 341. Still this huge gap down here on the daily. Anyway, so cues, right? Look for the gaps. Look for the gaps to be your bounce areas and watch for this trend line, possible trend line rejection right here. 369, 370 cues chart. Super clean, super duper clean. Might try to take some cues trades with you guys. I know Justin, a lot of other people in the chat trade cues all the time. I'm more so sticking to like SPY and ES, but cues trade and their contracts move beautifully. Now, look, and a beautiful but ugly chart is going to be this IWM chart. Last but not least, look at these gap ups on IWM. I mean, just insanely massive gap up here, right? So I'm going to move this. We said as long as we reclaim 170, 176 is on the table. What was the high of the day? 175.69. Close but no cigar, but pretty much there, guys, right? Pretty much there. So now that we can see that this level, this old little balance, tiny balance zone that it was in, likely going to watch for this reject right here, right? 167.50, maybe a little liquidity grab higher, maybe we get up to 177, right? But we have 1, 2, 3, 4 consecutive green days with 2 gaps, right? 2 gaps of major gap up. I mean, IWM doesn't have major gaps like this typically. So do we think we can get some gap fills? Absolutely. I'm going to be watching rejects 176.50, bounce 170. Okay, bounce 170 on a gap fill, right? We can see this old balance zone where we broke down, we reclaimed it. Do we come back and hit it again? I think we would. I'd like to take the bounce there. Getting down to all the way to 165 again, I don't know. Maybe if the rest of the market wants to stay strong and rally, right? This was a huge, huge demand zone down here that we went down and held. Remember, let's go 3 years. Look at this area. Look how many dips we had. We went down and held it. Let me look at this. Look at this green bar here on IWM, which I really like because it actually has volume that supports it, which is good, right? The volume supports this. So daily chart level, super simple to see, right? Look for this 176, 176.50, 177 liquidity grab we've been talking about, possibly for the reject, and then look down at 170, 167.50 for your bounce zones and that one gap fill there. And guys, that's all I got for you. Justin, what's going on, brother? What do you got for us?
What's going on, guys? Let me go ahead and share my screen, and we'll go ahead and get started. All right, guys, see my...
Yep, I
Cool.
got you.
So the first one, Disney does have earnings this week, but I am on watch because, oh my gosh, because we are entering into a big supply right here, right? Every time we're in this zone right here, we get a nice big fat reject. It's pretty much has been in this range for about a couple months now. Right, we're just sitting in this big range on Disney. So I do think if we finally break out of this range, is what I'm watching this week at 86.50, we can really see some powerful moves to the upside. You know, everyone was counting Disney out and, you know, multiple bottoms, but it is multiple tops at the same time. So what is that? That is called a range, textbook right here. If we do break out to this upside, I am watching it after earnings. Might even take a trade, maybe a lotto swing before earnings for this breakout here. But always best to play after earnings, right? Always best play after earnings. But if we do 86.50, I'm watching for that break and hold back into 89, 93, 95. And I mean, honestly, if we break over that, there's just sky's the limit back into about 100, 103. Go ahead and take a look to the daily here. We could see if we break out of this range, nothing but room into that 89, 90 level, and then into that 93, 95, and then it is nothing but room to the
Sky's
upside.
the limit.
Yeah, sky's the limit right here for Disney. So if they report better than, I think because everyone is pushing them off to the side, if they come out, have slightly good guidance, and they report better earnings than is predicted, I think we're going to see a massive squeeze here on Disney for sure, just because I think there is a lot of shorts coming into Disney. So if they screw over everyone at earnings, I think we can definitely see a nice squeeze that we can play. But those are my levels to the upside. Also watching for a back test here into this 83. 80, 83, 82 level into this demand right here. Since we broke back above, let's watch a breakdown, right? Nice little pullback into this demand around 83, 82. We can even say 84 into this nice little demand, right? We could see demand level right here. But 86.50, all eyes on 86.50. If we break and hold that, really just, I think we can finally break out of this range. So I think there'll be some short covering, and I think we'll see some nice big moves to the upside there on Disney. Next on the list is going to be NVIDIA. NVIDIA also coming up to these big levels here. Feel as though it is a little bit overextended, as with everything. I mean, everything has ran so hard last week. It was really a sight to see. So this week is, are they going to push these up just a little bit more? I know coming into this week, seeing all around retail is just, chopping at the bits to go short and call another top here, which makes me believe that they could push us up just a little bit further and then get everyone super comfortable to the upside. And then that's when they drop it versus just coming up to the supply. Everyone sees that it's supply. We've had a huge move. They might drop us just a little bit and then push us up. And then we finally get a drop down is my guess on a lot of these names on the indices and everything. Why? Again, because we are pushing into a big supply. Retail and everyone is, supply, supply, supply. We want to get short, trying to call another top here, only for them. I could see us pushing down a little bit, a little pullback, maybe beginning of the week, push us back above the top. Everyone gets super comfortable to get long again. And then they finally drop us on our heads at that point. Got to think like an MM, right? Think like an MM, not as a retail trader. But this week on NVIDIA, I am watching for a 453 break and hold to the upside. We have nothing but room into 458, 462, really. So 458, 462 to the upside if we do decide to break this 453. We are losing a little bit of momentum. So that's why I'm guessing if maybe we get a pullback, everyone wants to get short. Retail's like, oh, this is the top. And then they push us back up above into the supply. And then finally they'll drop us back on our heads. But so just keep that in mind and going to this week. We'll play whatever's in front of us, but just letting it be known, have to start thinking like an MM. What would an MM do? Well, everyone's looking to short into supply here. So maybe they drop us a little bit back. Everyone's going to pile on the shorts because they're like, oh, this is the top into the supply. And then they push us back up just a little bit higher. And then they finally drop us. So just think about that. Think about that when you are taking trades. Sometimes it is the most obvious where we're into this demand or we're into the supply and we do get that nice fat sell. We need to get that big, nice fat bounce. But I do think with this crazy bounce, there's going to be some trickery going on this week, especially because everyone, right, it does look very overextended. I mean, we had some insane moves last week that are really, does not happen off the time. They're more on the rare side where we see moves like that. So everyone's thinking overextension into supply. We're going to just short the hell out of this top. So if I was an MM, I would pull it back a little bit, get everyone onto the short side, only to push it right back up and to break over a little bit of supply and then finally pull it back. But that would just be me if I was an MM. But anyways, 453, break and hold to the upside into 458, 462 into these levels here. And then we could look to get short above once we get into these levels here. But as always, if everything is getting weak, then we could look to short this 453 area back into about 444, 440 is what I'll really be looking at. 444, 440 for a back test to get long right above this demand right here. So 444, 440, looking for a back test into this demand if we do decide to get weak, and then we can look to get long right there, or 453 break and hold to the upside, 458 to 462. Is what I would be looking at here on NVIDIA. Next on the list is going to be ROKU. ROKU, again, I mean, insane move. Massively looks overextended. So looks like we are getting some momentum loss, right? But looks like momentum loss here, only to push up. Momentum loss here, only to push up. Is it another momentum loss here, only for another push up? I mean, nothing but room in the 95 here. We can take a look to the daily. In all actuality, I mean, there's really nothing but room back into around this 100 level. If we're really looking at the higher time frames, nothing but room into that 100 level. And we could see it right here, this 97 and then about 100. Nothing but room into these levels if we really decide to keep getting long here. But this week, I am watching these levels, right? So we got to play the levels, not just, there's nothing but room, but we still have to watch these levels. So this 86 is what I'll be watching coming into this week. If we break and hold this 86 on a Roku, be looking to about this 88.50 level here, right about this wick. We can see there was some resistance, right? Resistance. We broke down here, resistance right here, right? So this 88.50 level would be my next level to watch on this break and hold over 86. Beyond that, I'd be watching this 90 level right here. And then above that would be 95, and then nothing but room. It's about 99, 100 to the upside. But again, guys, if we do decide to get weak this week in the beginning, then we can look to this short this, right? We can look to short this 86, about 88 level. Back down, I'll be watching this 80 to around 77, 80 to 77 for a nice back test right here into demand to get long right there. So if we do decide to get weak, we can look to get short this 86 level, 86, 88 levels, right back into this demand around 80 to 77. And I would look for that demand to hold for a bounce back up. And that is what I have on Roku. Next on the list is going to be Google. I am really liking this setup on Google here. That was old. Right back into supply. But if we're looking on this 4-hour here, not right. What does that look like? It looks like a nice little bull flag that is trying to form. So this 130 to 130, would be the top of this wick right here. Right. Nice little supply right here. Did we push up and then get a nice little sell here? Very possible. So we can take, if 128, 129 holds, we can take this push up into this 130, 130, 150 level into the supply. But I like more to be confident if we get over this 130, 150, because as you can see here, I mean, really nothing but room into this 139, 140 level. Typically, though, when we have these imbalances, where it will start to reject is where the last support was before the last high and the drop. So we would really look for this area right here as a reject area first at 134. So if we take a break and hold of this 130, 150, I would look for 134 first. I wouldn't just look for 130, 150 straight to 139.40, right? I would look for 134 reject first, and then I would look into 139, 140 there. Let's take a look at the daily. Well, the daily matches up with that 4-hour quite well, right? What is right here? 130, 150 on that big move down after earnings. But another thing, why I say that 130 to 130, 150 area for that reject is if you look at the daily, bear flag, right? I mean, clear as day, bear flag coming right up to the supply, and then maybe reject back down into maybe the 125 area, right? And then hold the top of this nice rejection zone, right? So we have reject, 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 and we finally broke out. Coming into the top of this supply right here, looks like a bear flag. Then we would play it out, get a nice little pullback right into the top of this demand at about 125, and then push back up to get long again right there. So again, that is why I'm looking at this 131, 130, 150, right? Area of supply right here. It is looking like it's a little bit strong with this bull flag on the 4-hour. But I mean, the 4-hour is even still a bear flag, right? I mean, bear flag daily, bear flag right into where we rejected right there. So definitely very possible. That's why I look for that reject first. But if we are going to stay strong, that's why I like that 130, 150, just a little bit better to get long instead of just getting long right out the gate right here. Would rather have that clear instead of getting caught in this bear flag here, and then we reject and we push back down to 125. That wouldn't be too fun to get long there, and then we start selling, right? But very possible we could obviously bull flag out here and push up. Just really, really depends. 131 to 131.50. Supply reject first. 131.50. Break and hold. Looking for 134, and then really nothing but room into this 139, 140 area here. And again, for that back test, I would be looking at 127 first, and then obviously all the way back into this 126, 125 area to hold there for a nice bounce if this becomes a bear flag and we push down right there. Last but not least, I do have Amazon on the list. I like this one as well. For Amazon, 140, 140, 140. Let's take a look at the daily here. As we know, we got to zoom out. Well, why would I be looking for a nice fat reject in this level? Well, actually, let me do this first, right? What has happened when we get into these levels here, right? So we bounce and then now we're falling, right? Supply, right? Supply, supply. Is this going to be another supply, right? Are we going to continue this as a supply, or is this supply going to flip into demand finally, right? There's only so many times we can touch into supply where, the buyers are going to outweigh the sellers, and then it will finally turn into demand, and then we push through, right? So we do get a rally, Santa Claus rally, whatever you want to call it. Wouldn't be surprised that this supply, right, turns back into demand and we get a push higher. But of course, we got to play to what it has most recently been. Supply, supply, supply. So let's look for that reject first and the weakness, especially with the overextension. Typically with Amazon, right, we have big push-ups here, push up, push up. We really have had no pullback yet. I mean, if we take a look back here, every time Amazon has gotten pretty strong, we always see some sort of pullback. I mean, it just really is, right? Strong here, sell off, strong, at least some sort of pullback, right? So the pattern on Amazon is typically when we see a nice big overextension, we're going to get some pullback, some sell off at some point. Amazon really has never, at least within the last couple of years, had a nice push up or overextension, and then it just keeps extending. We easily see some pullback and some sell off here. So if we're going to look at the patterns and we're going to look at the personality of Amazon, we would think that, yes, especially since we're coming into this big supply here, little overextension here, we would probably see some sort of pullback within this area right here. So first we can look for 140. It's about 141.50. Let me take this off, make it a little bit cleaner for you guys. Looking for this 140, zoom in. 140 to 141.50, right? Or 141.75 here, the top of this. If you're break and hold that, right? 141.50, let's call it 141.75. We can have room up into this 145 area, really 146, and then after that 150 if we break to the very top there. But really, I look for that 140, 141.75. Look first for that reject. I mean, we are getting weak into this area. And as I said before, I mean, with these big push-ups on Amazon, we typically see some sort of pullback, at least some little selling. If it decides to get long again, we would probably see some selling first, maybe a nice little bull flag here and push up. But that's why I'm looking for that sell first in this 140, 140, 150 area first into that supply. Over 140, 150, nothing but room. It's about 145, 146 there. If we do decide to get sell, we miss the sell here. Are we looking for around 135 here, right? The top of this zone, 135 down to about 133. So right in this area right here for a bounce into demand to get long again. And that is all I got. As we know, guys, one trade at a time. Trading is not about getting rich quick. Let's come this week with realistic expectations and realistic goals. If you have a $100 account, you're not going to be making $100 a day. If you're making $20 a day at 20% on your account, you're absolutely killing it. If you have a $500 account, possible to make $100 a day. But again, if you're making $20 to $50 a day, you're absolutely killing it. $2,500 account, if you're making $100 a day, that's normal, right? So we can't expect to make all this money right off the bat. It's not being realistic. So let's come with realistic expectations, realistic goals when we are trading, right? We have to. There's so many people that just come into the game first couple years, yes, not first couple months, first couple years. If you haven't been in the game for 2 years, you're still new, you're still a newbie. You still shouldn't be expecting to make $100 to thousands of dollars a day. Just not realistic, guys. You have to be 2 to 5 years into the game before you start to become consistent. And that's just going to be the honest truth. So let's take it one trade at a time. Let's have our focus on building that foundation, understanding our strategy, risk management, controlling our emotions, all that good stuff. And then small sizing, guys, 1 or 2 contracts as we build, as we learn, and then we'll eventually get to size up. right? If you gave up now, what's going to happen in 5 years, right? Look where you'll be as a trader in 5 years. That's where you have to look at when it comes to trading when you first start in the game. It's 5, 10, 15, 20 years. Where will I be? Right. First couple years are going to be shitty. They're going to suck. You're going to lose money. It's not going to be this pretty lifestyle. But if you're going to stick with it and you're going to build with realistic expectations and goals, one trade at a time, learn the foundation and build that foundation. The rewards are endless. So let's kill it this week, guys. I believe in every single one of you. You are the best trader that you know.
Well said, Jay. All right, guys. Other than that, anyone in the Wolves Wealth, we're going to see you guys bright and early for the pre-market huddle tomorrow morning. Other than that, guys, thanks again for joining us. Appreciate you guys, and we will catch you later.